Good morning, everyone. It is Wednesday, June 16th, and we are doing Nadex morning analysis on Fed Day. My name is Todd Rich. I am with Nadex. With me from Keep Trading Simple, Brian Caprice. We are going to look at a couple of potential hot spots to be looking at where you might see some volatility today. And it's an interesting day today with everyone waiting to hear what the Fed says about any potential shifts in their policy. Before we jump into it, I do need to share that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So what do we want to talk about today? Well, first, this is the conversation we knew we'd be having all week. But what we're looking at, by the way, this is the Daily FX website. This is their calendar for today. As you can see, early this morning, the UK came out with their inflation numbers. Everything higher. Not quite as high as they are in the US, but they are above forecasts. So you're seeing inflation in the UK. Canada just came out with their inflation numbers, also trending higher and also above the forecasts. So, yes, when the U.S. comes out and we come out with our numbers today, with our economic projections and what they might do with interest rates, uh, there's inflation going on in the U.S. We already know that. We've seen that. What is the Fed going to recognize it? And I think the consensus is the Fed's going to recognize it. It's happening around the globe for them to stick their head in the sand and say, nope, we don't see anything here, nothing to see, keep moving along. I think that would be quite shocking. The question is, they've got a policy that they put into place in March where they were going to hold everything steady through 2023. Expect to hear that they're going to say they might have to do something in 2023. In any case, the markets are going to react. We will let's take a look first. I think what we're going to do today is we're going to take a look first at the pound. We're seeing some movement in the pound, and then we'll do a quick little rundown of the equity markets, and just take a look where we are with U.S. equities going into the Fed announcement this afternoon at 2 p.m. Eastern. But the markets otherwise are very choppy. Everything is chopping sideways. But let's just take a quick peek. Brian, I'm going to flip it over to you and let you go through a bit of the inflation numbers that we're seeing. We'll take a quick look at the pound dollar and some potential opportunity there, and then we'll go around the horn on U.S. equity indices.
Sure. Yeah. So, I mean, yesterday we mentioned in both the morning session as well as the afternoon session that CPI was going to be important to watch today, that it was a day full of basically inflationary news releases. First one was the year over year with the pound. We mentioned it being good. A couple, and I'll show you in the charts in a second, but we talked about being able to get long this position before it came out, particularly in the pound dollar, because we can play that for a retracement. As you can see, it came in above expected. It was unexpected for the forecast, but I expected it to be higher. And again, all those went up. You can see that the pound dollar is up 54 pips from where we were yesterday. Euro pound is down 23, and then pound yen is up a little bit, although retracing. And again, a lot of that is the yen coming into play now. Just a little while ago, about 15 minutes ago, we had the Canadian inflation numbers. And again, the month over month, again, not transient. It's actually getting higher than what they had before. But the one thing that I do want to look at, and again, this is a number we don't always see for the United States. It's not the kind of in-your-face number. I'm sure we do it here, but it's not one of the major headlines. If you guys see this trim CPI number here, year over year, now trimmed is a word that we don't hear a lot, but I think it's important to kind of mention because we know in the United States where a lot of the inflation is coming from. If you click on this, again, you can see that what it does is this is the change in price of goods and services purchased by consumers, excluding the most volatile 40% of items. Well, we know what the most volatile is and why it's kind of messing with the inflationary numbers. It would be kind of oil, right? We know it's the energy stock or the energy commodities that is really jacking. This is removing that, and you can see that it's definitely much higher than expected. The reason I'm highlighting it is this 2.7 is actually higher than what I feel that Powell is saying. We're going to let inflation go hotter than normal. I really feel that they're going to talk about 2.5% today, and they need to quantify it. If they say that it's going to be 3 or 3.5, there's going to be major market movement. I believe the consensus is that it's going to be around 2.5 is what they mean by more than normal, because again, the mandate is 2%. That's going to be kind of a big thing. Now, the reason why I'm pointing this out and how we trade it again, we're going to use the pound dollar, but every single CPI basically across the world that we're seeing is up, 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 up. And supposedly it's transient, but here's the thing. With the rest of the world opening up right now, why would inflation go down if we're going to start going on a spending spree as recovery is happening? Kind of one of those scenarios where you're like every kind of country, and again, not all countries have access to the vaccines, but now we're giving vaccines away to everybody who wants it, basically, to all these other countries. But all the countries that have had it now, and again, it doesn't mean COVID has passed. I actually knew somebody that passed away yesterday from COVID Canada. It's one of those things. It's still here. It hasn't gone anywhere. But at this point, I mean, everybody's opening back up again. We're about to go on a massive spending spree. It's not like, when you're spending lots of money, you don't see prices go down. They're not like, hey, you know what? You want to buy more? We'll lower the price for you. No, they're going to take advantage of every bit of what they can. We've seen hourly earnings go up for employees. We've seen employers say, hey, listen, I can't hire enough people. There's not enough people to work. These are all things that lead to inflationary pressures because people are getting paid more money. So it's one of those things. They got to quantify it today. Now, how do we trade it is another story.
Hey, by the way, Brian, I'm going to tell you, I actually was just looking. McDonald's in Utah near the national parks.
Mm-hmm.
Because everyone is going out and they are flooding the national parks. They're offering people $18 an hour at McDonald's, like in Moab, Utah, because they
service
can't.
jobs.
It's double the minimum wage in Utah, and they can't get people in there, and they need employees, and they're paying them $18 an hour, double minimum wage. Just at the ones near the national parks because they're just flooded because everyone's flooding into the national parks.
Yeah, I mean, it's a service. So what happens is we got crushed because of COVID with the service industry, and that's why they said, don't be concerned. It's not that people aren't spending money. Retail sales is goods, right? They're taking it from those goods and bringing it across to the services section. So they're still spending money. So everybody's like, oh my God, entertain me, please, and spending a lot of money. And again, same thing. We've seen the average hourly earnings go up every month. It keeps going higher. That's a good thing. People are getting paid more money. Trust me, I'll tell you right now, if you're paying somebody double minimum wage, they're going to spend that money more back once they get it. They're like, whoo, this is like a bonus, right? Yep. So it's a trend you're going to see. Inflation is not going to go, prices are not going to go down when they're getting more money because people are just so tired of being locked up, right?
Yep. They're going to spend it, and 100%. Demand is up.
Yep, that's how it works. So here's the pound. Okay, this dotted line, if you guys remember from yesterday, we talked about taking advantage of the news, and we talked about how much I love news and why I loved it. And again, it was because of the CPI rating. I expected the pound to go up. Now, we were talking, and again, we were expecting it to drop. We were kind of sitting over in here yesterday, and we expected a little bit of a rollover. It literally went to sleep and did nothing, right? It just went sideways for, this is like a crazy range. It moved 7 pips, top to bottom, from 12 p.m. yesterday until basically 2 o'clock in the morning when the news release came out. So we never got the push down, but the same kind of idea worked. It was still sitting on a zone where we had buyers in the past, where it had stabilized itself. So, same idea, and I'll remove this so you guys can see it, and there was a result. Okay, an immediate pop up again. We hit a zone of kind of pulled back. So we mentioned about being up here by the FOMC meeting note. It was wishful thinking. We were hoping we were going to get up.
Not going to get up there.
But yeah, it could. But again, we talked about kind of coming down, and the most likely scenario is that we would be over here. Nothing has really changed. We still know when the FOMC meeting note is. Just like we saw in Canada, just like we saw in the pound or in the UK, I expect there's going to be something that brings in dollar strength today. Just happens to be, and again, we talked about this yesterday about call spreads, and I said, hey, listen, you got to watch the knockouts. Unfortunately, none of the pound knockouts really made sense. They're too far apart. They need to be adjusted. And I said, go check out the dailies. Well, guess what? The dailies didn't make sense either. But there happens to be another one that is a 7 a.m. to 3. Okay? That one, there is one of those that makes sense out there today, and we're in a position right now where it's pretty decent. And again, is there a risk with call spread? Sure. Could it continue on the trend from this morning? It absolutely could. Could the news today be horrible where the Fed's like inflation? I don't even know what that is. And could that lead this higher? Absolutely. The difference is if we get into something early, we can avoid some of the premium. And if it does whipsaw higher, guess what? We haven't taken out of position because it could potentially go a bit higher. and then all of a sudden get slammed at the end of the day. And again, remember, Forex daily contracts close at 3 o'clock. And again, I wish that would change to 5 because that's when the currency market closes, not 3.
Right.
But at the end of the day, that's what we got to deal with today. And again, the FOMC meeting note is at 2, and then we have the press conference at 2:30, and that's where some of the big surprises may also come out. Because remember, he's already prepared the statement for 2 o'clock. He's going to get blasted with questions at 2:30 from all the reporters. They're like, "How can you say that there's no inflation?" If so,
Yeah, I'm going to be hard pressed if he says there's no inflation. But we will see. It's going to be an interesting day. I have a feeling the Fed is going to have to Powell is going to have to say something different than what he's been saying. So.
Yeah, I mean, he's going to say transient, but the problem is they put a timeline on when we'll see the transient disappear. And if it doesn't, now he doesn't know what he's talking about. So he has to soften his language about what transient means, or he has to
100%.
quantify these things. Because I'll tell you right now, if he says it's going to be gone and it's not gone, then the Fed has lost all credibility whatsoever.
All of its credibility. Right. I mean, right. They can't. It's too much of a risk for him to lose. Right. He's got to give himself a way out. So, yeah. So the pound dollar, an interesting place to take a look at it. The way it's setting up, a call spread might be an interesting way to do that. Something to look at today. While the equities all continue to chop sideways, I don't know if you just want to take a quick spin through some of the equities.
Sure. I mean, how much it's been for? So this is exactly where we were at the end of our presentation yesterday, and we're in the exact same spot. it just hasn't moved. So, this is. The statement today is a very, very big deal, and we may see it. And again, this is kind of where we were looking for as a target. We came off of there, so we can adjust this slightly up if we're looking to get short. Typically, we go into the 15 minutes for opening trades, but right now, is there really an explosive level? There's a little one, and again, we could kind of adjust this slightly up top if we wanted to. I would say if we can kind of grind up in the next 30 minutes, it's possible, but it's in there. Everything that we expect to see, everything the Fed should say today is not really a positive. Excuse me, it's not really something positive for the overall indices because, like I said, inflation is not good for the indices. If they're married to this, that it's transient, it's all going to disappear, we don't have to worry about anything, then yeah, it does have the ability to jump higher today. But I just don't feel like with every other country mentioning it, talking about a taper, again, that's another thing that is, and again, we're not raising interest rates anytime soon, but even talking about
for the purchases.
Yeah, right. But talking about tapering, pulling the support from the market, again, that's also something that kind of destabilizes the indices a little bit. Does that jack gold? Not necessarily, but it should mess with the indices because, again, if you're not providing support now we got to see if the economy's just, and again, if it starts going down, then obviously they weren't ready. If not, they overdid it. And again, I'm going to talk about interest rates, but like I said, there's a small level here. I still had 13,927 on there. It's a bit of ways away. I mean, it's not crazy away, but it's enough away. I mean, it can definitely do that. If you look at kind of what the measured move was, yesterday for the first hour, you can see that brings us right down to this level. And again, this is without FOMC. We have a lot of, there's a lot of news in here and a lot on the line right now. So, I would keep this on there, this 13,927. Couple ways you could play this today. Again, you can kind of see if there's anything on the shorter duration down there. You could be looking for out of the money contracts. Remember, it's probably going to be a big mover. I don't know what direction. I don't have a crystal ball. I have my biases of where I feel that it's going to be. But if you do feel like you're going to get a lot of movement, one potential strategy on this one, you can look for a breakout. And again, you may have to put the breakout a little bit farther out. But do we expect a big move today? I think everybody does. And the fact that we're so bottled up, we've seen the VIX go up. It was up 1% a little while ago. You're seeing that volatility increase. Once the U.S. trader comes online, I bet you the VIX jumps as well. So again, there's a breakout strategy you could play on NQ. ES is basically the same thing. We had a level down here at 42.24. The way that it just literally it's kind of chopped back and forth and gone sideways. The European market has really done nothing. Right? I mean, the European market started here, pushed it down, came right back up again at 6 o'clock, and now we're kind of right at the medium right before the UK Open. So it hasn't done much. The trade from yesterday morning that we talked about, that break is now out. So I can delete this from the thing. It went to its full duration to the bottom side. Again, that racetrack is now officially gone because it came back to the origin of it. This is that old level that we pulled through. We don't need that anymore. I would say right now, I mean, top-wise, not that I think that we're going to rally up there, but I would say these are the two levels that I have sitting right now in the ES. And in all honesty, I don't think either one of these two are going to be able to hold an FOMC surprise, top or bottom. But again, we're kind of, as you see, we're trending right down the middle of it's not really making up its mind where it wants to go. So we got to see where the U.S. trader goes. And YM is basically the same thing. YM is,
Yeah.
again, completed that same move that we talked about yesterday morning when we were leaving. So we'll take that off. And since that time, it's really just kind of based along this buying area around 34,115. We do have that level a little bit lower. Do I think that we're going to all of a sudden drive down here and FOMC is going to be like, hey, everything is fixed. We decided that we're going to keep interest rates here forever, and then it does this. I just don't feel like that's what we're going to hear. But again, remember, the market does what it wants to do. It doesn't have to listen to anybody else. It can be completely, rational or irrational. But I do feel that it is a day today where it's probably lining up more for shorts. And I do, again, remember, the market is also not stupid. The market is kind of prepared for this as well.
Right.
So, if he takes a very extremely dovish thing and everybody's like, what did he just say? What? Who? What? That's where this thing all of a sudden takes off. So, there are ways to get into this a limited risk way, but I would say kind of the same thing. A breakout with shorter duration binary contracts, a little bit farther out of the money, may be the way to play it. Remember, do you need it to pass through the binary to make money on it? No. You could take something and take it off early, get something for $15, $20 risk. When the price even gets remotely close, take it off for $50. Set the order so it automatically does it. So even if it whips up and whips back down again, you got taken out of the trade with your profit. It doesn't really matter at the end of the day where it ends up at that point. When you take yourself out early.
That's what they're all these charts are looking the same, but you're right. I mean, there's ways to play this where if you think, you looking for a spike up, there might be an opportunity. You grab some of these out of the money ones up here. If you think it's going to get crushed, you can, the same trade, you sell one of these out of the money ones down here, the deep in the money ones, as it comes down, you just buy it back. Is there, if you think it's just gonna stay in this general vicinity and we're not going to see any volatility, you've got the at the monies. But if you're looking for some type of move and you're not sure which one way or the other, you could look for some of these out of the money or deep in the money binary options where you're looking for a big move. Either way, for whatever reason, because again, he could say something and the market could interpret it entirely. The market will interpret it how the market wants to interpret it. And again, everyone, we're just chopping sideways. Not really quite sure how everyone's going to react to the news, and we'll have to wait and see. So, going to be an interesting day in the markets. Brian, you got anything else you want to, any parting shots?
I would just say again, when you're looking at news for the morning, don't forget that we have oil out there. I want to make sure everybody gets out there, but the API number was quite large. Whether or not it'll actually be an oil trading day is another story, just because, again, remember, everybody's focused on FOMC. This is a gigantic miss. If there was nothing else going on, I would say that oil would definitely be a huge mover today, particularly because oil right now, it had a very little one, right? We talk about little big. It's a very, very little move today, but all eyes pretty much around the entire world is going to be sitting here on the FOMC economic projections as well as the press conference. They're not changing the Fed fund rate. So if they did, I think everybody would be like, wait, what? What happened? What country am I in? It'll be the economic projections.
Their attention.
If they raise it, it's like a 0.0001 chance that it's getting raised. But the economic projections are important as well as the press conference. So that's what you need to watch out for today. But again, if you're into oil, check it.
Yeah, they're right. There is another oil inventory report, but it's just going to be difficult with everything else in the background around Fed Day. With that, you got any questions for Nadex? You can email us, customerservice@nadex.com. Questions for Brian. He is also very accessible. You can email Brian at support@keeptradingsimple.com. And again, what are we looking at? It's Fed Day, 2 p.m. and then the press conference 2:30. That's really what everyone's looking for. Equity markets all chopping sideways. Really, oil off a little bit of its highs from yesterday. There is that inventory report, but take a look at the pound. There is some potential movement that we might see as the European traders wrap up for the day and the U.S. traders get into it. Take a look at that pound dollar, particularly on the inflationary news that we saw in both the UK as well as Canada. With that, good luck in the markets. Brian and I will catch you again tomorrow morning. Thanks, everyone.